Something really big is happening with gold right now. And I mean prices aren't just creeping up, they are smashing through old ceilings and entering totally new territory. So the big question is this just another sugar rush, a temporary spike, or are we actually watching a deep fundamental shift in the entire global financial system? All right, let's get right into it.
So when I say entirely new territory, what am I talking about? Well, look at this number. We're talking about gold blowing past $3,600 an ounce. Now, a number that big, it doesn't just happen by accident. It really forces you to stop and ask, what in the world is going on here?
And here's the bottom line. This is the core idea of what we're talking about today. The consensus from the people who watch this stuff for a living is pretty clear. This is not a flash in the pan. This is the start of something much, much bigger. We're likely at the beginning of a new, long-term structural bull market for gold. But what's really driving it?
Well, the answer isn't just one thing. It's actually a powerful mix of forces all coming together at once. So we're going to unpack the engine behind this massive rally, and you'll see it's basically powered by three separate but reinforcing megatrends.
Think of it like a perfect storm, right? First, you've got the basic economic fuel. That's the macro engine. Then, you've got this huge new group of buyers jumping into the market. We're calling that the Great Accumulation. And then, layered on top of all that, you have this global atmosphere of risk and uncertainty, which adds what we call a geopolitical premium. Any one of these is a big deal on its own, but all three happening at the same time, that's what's creating this incredible momentum for gold.
Okay, so let's dig into that first trend. To get it, you have to understand this one concept: real interest rates. Now, it might sound a little technical, but it's actually super simple. It's just the interest you earn on your money after you subtract inflation. And for an asset like gold, which doesn't pay any interest, well, this concept is absolutely everything.
So just put yourself in an investor's shoes. When real rates are high, holding bonds or cash makes a lot of sense. You're earning a decent return. But when real rates are low or even negative, which is what the market is betting on as the Fed gets ready to cut rates, then holding cash or bonds means you are literally guaranteed to lose buying power. And in that kind of world, suddenly gold's big weakness, its zero yield, well, it flips and becomes its greatest strength.
Now for our second mega trend, and this is where things get really wild. The amount of gold being bought by the world's central banks is just staggering. For 3 years running, they've been scooping up over 1,000 tons of gold every single year. This isn't just some minor trend. This is a historic buying spree that has fundamentally changed the market, building a huge new price floor for gold.
So the trillion-dollar question is why? Why are they buying so much? Well, it's a major strategic pivot. They're trying to depend less on the US dollar, they're hedging against crises, and this is the big one, they're trying to sanctions-proof their reserves. You got to remember, when Russia's dollar assets were frozen back in 2022, that was a massive wake-up call for countries all over the world. It showed them the real risk of parking your nation's wealth in someone else's currency.
And just look at who is leading this charge. We're not talking about a few small countries here. We're talking about major global players and emerging economies like China, Poland, India, Singapore. They are all making a clear, long-term strategic move away from the dollar and into the physical safety of gold.
And that brings us to our third trend, geopolitical risk. Now, in the past, you'd see gold spike for a little while when a war started or a crisis hit, but this is different. With long-running conflicts in Europe, constant tension in the Middle East, and the whole US-China situation, that risk premium isn't temporary anymore. It's become a persistent, baked-in feature of the gold price. It's basically the new normal.
So, to really get a handle on where we might be going, it helps to know where we've been. Let's just take a quick step back and look at the last 50 years of gold cycles to see how this new era really fits into that bigger historical picture.
So this timeline packs in a whole 50 years, but the pattern is pretty clear. After things really kicked off in 1971, you can see these massive cycles of boom and bust. But I want you to pay close attention to that last decade, from 2013 to 2023. The price basically went sideways. It consolidated, building this massive base that technical analysts call a cup and handle pattern. It's like coiling a giant spring. And that breakout we saw in 2024, it wasn't just another jump in price. For a lot of people, it was the technical starting gun for a whole new major cycle.
All right, so with gold making such a big move, what does that mean for its old rival, the stock market? Well, there's a really fascinating power dynamic shifting between them, and it's something every investor should probably be paying attention to.
So, there's a really simple but powerful tool we can use to track this relationship. It's called the S&P 500 to gold ratio. Just think of it like this. It's asking a simple question. How many ounces of gold does it take to buy the entire stock market? And if that number starts falling, well, that's a pretty clear sign that gold is getting stronger compared to stocks.
So that's the big question, isn't it? At this really critical moment, what is this ratio telling us right now? And the answer is, it's telling us something huge. The ratio has just smashed through a key support level that's held up for more than 10 years. Now that's a massive technical signal. It's basically the market flashing a giant sign that we could be starting a new long-term cycle where gold starts to outperform stocks after a solid decade of stocks being the undisputed king.
Okay, so we've got all these incredible forces in play. We've looked at the history, we've looked at the charts. Where does the road lead from here? Let's take a look at the forward outlook and see what some of the biggest names in finance are actually predicting.
Well, don't just take my word for it. The consensus among the real heavy hitters is incredibly bullish. You've got forecasts here from JP Morgan, UBS, ANZ Group, Van Eck, and they are all pointing to a price somewhere in the neighborhood of $4,000 an ounce. They're all seeing the same powerful drivers that we've just been talking about.
So if you want to follow this story as it unfolds, what should you be watching? Well, here's your cheat sheet. You're going to want to keep a close eye on what the Fed is saying, the direction of those all-important real rates, the quarterly reports on what central banks are buying, how much money is flowing into gold ETFs, and of course, any big geopolitical news. These are the signposts that are going to tell us where gold is headed next.
And all of this really brings us to one final, pretty profound thought. When you have all these different risks, macroeconomic, geopolitical, financial, all feeding into each other in this crazy feedback loop, it really begs the question, in a world where every currency, every bond is tied to a government and its politics, has gold finally reemerged as the one and only truly neutral safe haven asset left standing?
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.